Tusca La Mazerie there in New York. Well, we can speak now to Jameel Ahmad from GTC Group. Jameel, we're going to take a look at the global markets. Give us the overview.
Thank you so much. Actually, it looks like global markets appear to be slowing down in volatility a little bit heading into Christmas season, but I'm not going to say that investors have taken all hands off deck because we still have a couple of different movements. The S&P 500 and the Nasdaq have both retreated from their record highs. Bitcoin volatility remains high. Of course, we hit that historic magical $100,000 level at the end of last week, but we have dipped towards the mid-90,000s. We still have volatility in assets such as gold. And this week we have a multitude of different economic data releases from the United States, China, and also from the European Union. So I do think that we are not quite yet in Christmas season, but it does appear to be that volatility is quieting down a little bit, but investors should still be aware of potential jolts and shocks that we might have.
And Jameel, the Chinese government indicating that more and better targeted stimulus funds are on the way.
Indeed, and that's what investors have been waiting for, is same with analysts. We have continued indications throughout 2024 of the Chinese economic momentum slowing down. And in fact, there are concerns that the 5% government GDP target for 2024 is at risk to not being achieved. And already for 2025, we are looking, at least objectively, at the Chinese economic growth being maybe at the mid 4%, somewhere a little bit higher than that. So investors are looking for more clues that there will be more stimulus coming from the Chinese authorities, specifically to improve domestic demand, which would be the everyday consumer in China, because for all accounts, we are seeing economic momentum for 2025. On a global level, it's looking better than this time last year, but there are concerns that lower central bank interest rates is not the complete medicine that the world economy needs, and there is going to be more support needed for 2025.
You're also keeping an eye, Jameel, on the European Central Bank, widely expected to cut interest rates by the end of the week.
Absolutely. Talking about central banks, we have got the ECB, that's the European Central Bank meeting scheduled for Thursday, and we are expecting the fourth interest rate cut for 2024. And considering the economic data from Europe continues to show weakness and underlying weak economic momentum, it wouldn't surprise me if they cut interest rates by a larger amount than expected, which might be a 0.5% interest rate cut, considering that inflation is now below the central bank target. But of course, with the ECB, it's about the devil being in the detail, and that means that investors are going to be looking for more clarity and clues that in 2025, they will continue to cut interest rates, and it wouldn't surprise me if they give those signals this coming Thursday.
Jameel Ahmad, Chief Analyst at the GTC Group. Thanks very much indeed for joining us as always and bringing us a look at the economic outlook this Tuesday. Jameel Ahmad there, GTC. Well, it's time now for our press review with Leo McGuinn.